Okay, the next tab is the cash flows, and the cash flows is a very, very important page. Before we get right into it, I want to talk a little bit about the theory of the cash flow page. So here's typically how it works. Um, the formula for cash flow is really simple. It's cash in minus cash out equals balance. We put cash into our bank, into our pockets, anytime we make a sale. Anytime you get paid for providing a service or selling a product or anything of that nature, that's how we put cash in. We take cash out when we pay our bills. This includes our labor, it includes our cost of goods, it includes our rent, utilities, anything that is an expense to the business is cash out. Hopefully you'll have a balance at the end of every month. There should be still money left in your bank account. Now, the way it works is on the spreadsheet is we have been filling out all of these sales and cost of goods pages, all of these pages that we've already put in here. We've been filling out lots and lots of information. Everything filters through the cash flow page. It's just like a big hourglass. Everything filters through this page, and on the other side of it, it spits out reports. These are income statements, balance sheets, ratios, few other reports. There's almost nothing for us to do on these other sheets. So that's sort of the importance of the cash flow page. So here is our cash flow page. And if we look at that formula that says cash in minus cash out, one would expect that 50% of this page would be cash in and 50% would be cash out. If I scroll to the bottom, you'll see that here I am at line 88. This is the very end. So one would think that half of that should be, about 44 lines should be cash in, but it's not. Up at the top here, here's line 10. This is our cash in, and that's where we're done. But if you notice, we already have cash in. And all of this information comes from previous pages that we've already filled in. This particular information comes from our sales page. So we've had pages and pages of cash in. You'll notice here at the beginning of cash out, we've got huge gray areas, and there's already stuff filled out in here too. This, if you look at this, you've seen this information before. We've seen that on our startup costs, and we've seen that on the additional capitals page. And if I scroll sideways, you can see that we've actually made purchases. So for example, in year 2, computer equipment. Well, if you go back to our additional capitals page, you'll see that we said in year 2 we were going to be purchasing new computer equipment. And if I scroll over to year 3, you can see that we says, oh, we're going to do some leasehold improvements, add some furniture and fixtures, and I'm going to get a new vehicle. Remember, we said in year 3 we were going to move out of our house, operating out of our home, and we were going to move into a proper studio. So here, the financials actually show that that's what's happening. So I'm going to scroll back to year 1 again, and let's just go down these sides. So we've already got our capital. Now these are some of the operational. We've seen some of these things before. We've seen almost all of these categories before. Management, this is you. This is your wages. You don't show up on the other labor pages as wages. The only thing that you show up on the other pages is how much work are you going to do in production on the cost of direct labor. But here's where you pay yourself. And because you're management, you don't work per hour. You get to decide how much money you're going to pay yourself. We've got business license. So you can see that we've registered our business before we opened our doors. So now all I have to do is say, well, I need to renew my plates, or not my plates, but my business license. And I'm going to do that over here. Depending upon what community you live in, you have to go in and check to find out what your renewal is. Insurance. If you've paid for insurance, all of it ahead of time, it would show up here. If it's not, then it shows up here as a monthly expense, and you need to put that in. My monthly insurance for a photographer might be Well, it might start off really small because I'm working out of my house. So let's go $100 a month. And I can just drag that across. Bank charges. Remember, this is not interest. This is just the fees that you pay. So you're going to go out and do some bank shopping. You're going to go out and pick a plan that's going to work for you, and get the best plan that you possibly can. Dividends. You're certainly not going to worry about that right now. This is something that your accountant will tell you after you're making money, usually after your first year end. If you have used the operational GST number 1 way back in startup, it would show up here. If not, before you print, you're actually going to hide all these things. So we're just going to highlight that whole row. I'm going to right click. I'm going to go hide because I'm not using that at all. We also have other information showing up here. Here's our cost of goods. You can see that that's already there. That comes from our cost of goods page. Rent, we can put in, well, what does this thing say? In these cells, insert your estimation for each category of the month. Right, so rent, utilities, telephone, all of these things. Now, here's how rent works if you're working out of your house. Here is your castle. This is your apartment that you're living out of. It happens to be in 1,000 square feet, and you're going to pay $1,500 a month for this. In this 3-bedroom apartment that you're renting, you're going to carve out 1 bedroom, and that's going to be your office. That 1 bedroom is 100 square feet. It's roughly 10 by 10, and that's your office. Now, since your bedroom at 100 square feet is exactly 1/10 of your 1,000 square feet, it is 10% of your apartment that you're living. So your rent can easily be charged or figured out, because $1,500 times 10% is $150, and that's what you can put in here for rent. Now, there are some caveats to this, and I'll go through some of them. So your regulations and guidelines. Tax laws change regularly, so you need to communicate with your accountant on a regular basis, at least once a year, because typically that's when you'll find out. The higher the percentage, the more red flags. If you start saying, oh yes, I'm using 95% of my house for my business, that raises red flags, and you get enough red flags, you will be audited. Real estate agents only count space above grade. For example, if I live in a 3-bedroom bungalow, it might be 1,200 square feet. They don't count the basement in that because it's not above grade. So even though you've got a basement, the real estate agents will only count the top floor. CRA counts everything. So if it's a 1,200 square foot bungalow on 2 floors, then really you've got 2,400 square feet. So your 1 bedroom actually becomes 5% of your house, not 10%. So mortgages work a little bit different. If you own your house, you can only deduct the percentage of your interest and taxes. You cannot charge your principal back. Revenue Canada says you personally cannot benefit by having your company pay your mortgage for you. So it works out okay if you've recently purchased your house, because at the very, very beginning, 95% of your payment that you pay on your principal, interest, and taxes goes to interest anyway. So not such a big deal, unless of course you don't owe the bank anything on your house. You don't have to designate specific space to claim the rent. For example, if you live in an apartment and you can't designate 1 bedroom as that, you say, okay, I got my laptop, and you just sort of set up at the kitchen table, and at any given time your kitchen table can become the research and development department, it can become your production, it can become your office, it can become your accounts receivable, and you're moving around a lot. They're okay with that. Just pick a number. 10% is a good number to use, because they know that 10% of the time you're using your house for your office. Whatever percentage you settle on for your rent, you can use that same figure for your utilities. Don't forget your cleaning supplies. So this is your toilet paper, soap, and shampoo, and spick and span. Anything that you need to clean your house. Well, because you're also cleaning your office, that becomes your shop supplies. You can't claim your bathroom. Your bathroom has to become part of your house. You just get to borrow it, but again, you get to take 10% of your toilet tissue and your cleaning supplies and all of that. So it sort of balances out. This is a safe method for calculating if you're working out of offices. Now, some of the caveats to that are, if there's not, you have to really be careful if you're expecting a ton of clients to be coming to your house. The city is going to look at what extra traffic is going to be going up and down your street that is not part of the people who live there. Also, you have to really be careful if you're going to be setting up any production facilities in your in your house. Or dangerous goods. We had one client go through here and he was doing mobile oil changes, and the city wouldn't let him do it. He wouldn't let him store all of his oil in his garage, even though he had a service vehicle and he was driving out. He had, big 300 or 45-gallon gas drums full of oil, and they thought that was a fire hazard, so they wouldn't let him store his stuff on place. They're also looking at like I said, dangerous goods, noise levels, and extra increase in traffic up and down your street. So you kind of have to be really careful with exactly what's going on in your house. Now, all that being said, here's where your rent goes. So we said our rent was going to be $150. My utilities, I can simply go through and take my utilities and take 10% of that too. So that's going to be maybe $50. My telephone bill, my company needs me to have a telephone. So I get to use it, but they need to have it. They need me to have it. So my company pays 100% of my telephone bill. But that's okay. In Saskatchewan, I can get about $80, and that's my cell phone bill. It becomes sort of my shop phone. Shop supplies. Again, we looked at things like your cleaning supplies, and depending upon what industry you're in, it could be all sorts of other stuff. So just make up, whatever, find out what your shop supplies are going to be. I'm going to say it's about $100. Office supplies, not office equipment. Office supplies, pens, paper, whiteout, thumbtacks, anything of that nature. Probably about $40 a month for that. Meals and entertainment, it's always a good idea to put something here. Don't forget things like Christmas parties for staff if you're going to have that. So $50 a month should about cover it. Vehicle. Now there's a huge discrepancy. Lots of people get really mixed up with these two. What's the difference between vehicle and travel? We explain it well in the notes. The shortened version is that your vehicle is your sort of day-to-day running around the city, going off to jobs, that type of stuff. Your travel is typically bigger things that happen not so often. I'll give you an example. I used to go to a Citrix convention every year, once a year, and that was in Florida. So we call it tarmac to tarmac. So anything that happens from the time I get on the plane to the time I get back. So my meals, my transportation, my taxis, my hotels, anything associated with that trip goes into your travel. So vehicle, I might say, how many kilometers am I going to drive in any given month? And your CRA allows you to deduct that because you're using your own personal vehicle. So this is more money that you get to pay yourself. So the rates, I'd have to check because again it changes every year. But the last I heard, it was 50 cents a kilometer for the first 3,000 kilometers and 45 cents a kilometer after that. So if I expect that I'm going to be traveling about 500 kilometers a month on company time, then this becomes about 250 that I'm going to spend here. So I'm going to take these and go across from my monthly expenses, and I say, where is that convention that I typically go to? That's usually in February, and that's about $6,000. Repair and maintenance is a good idea, and again, depending upon what industry you're in. If you're a mechanic, then your repair and maintenance, you're kind of always fixing and replacing and whatnot, tools and or things that happen. Even if you're just working out of your office, allow yourself a budget in case your hard drive crashes. So I'm going to say about $25 a month, and I'm going to drag this over. Also, continuing down, training. I've got some, I think it's a good idea to always be improving yourself. So this could be training like you've decided that you're going to take a web authoring class so that you can actually do your own web updates on a regular basis. That might save you some money. If you're in a restaurant, you might have to pay for FoodSafe or WMIS or any of this kinds of training, and this includes for your staff. It could also be that you're decided to take a night class and you're going to take simply accounting so that you can do your own bookkeeping, and then you just take your books and you go and you take that at the end of the year to your accountant, and you can save some money on a bookkeeper. So it's a good idea to put something in here. I'm just going to put in this for now, something like that. Professional fees. This is your lawyer and your accountant. If you're incorporated, I'm going to go to the end here and I'm going to say, what does it cost me to do my year end? Again, depending upon the complexity of your business. If you're incorporated, it's going to be higher. So I'm going to put in about $3,500, and if I wanted to, I could put in here for a bookkeeper, and you talk to a bookkeeper, get some quotes on what you expect. They'll listen to how complex your business is, and they'll probably give you a quote. I'm going to put in about $200 for a bookkeeper. Memberships. This includes memberships like for the Chamber, Better Business Bureau. Is there a professional organization? As a photographer, I could join the Professional Photographers of Canada or the SPPA, Saskatchewan Professional Photographers Saskatchewan Professional Photographers Association. Anything that you have in there, usually you might pay for them right at the beginning, and you notice that I did pay for something here, so I don't have to pay for it right off the bat, but I might have to renew those at the end of the year. Miscellaneous, always a good idea to put in some miscellaneous. We talked about this before. This could be parking meters, it could be parking tickets, it could be incidentals, coffees or whatnot that you have with clients, and you're just sort of out grabbing a bite or something, making a sales call. Software subscription. I didn't purchase any software because I am going to get a software subscription. Add up anything that you need. So as a photographer, I might need Adobe Photoshop, I might need my accounting, and I might need Office 365 if I haven't purchased it. So whatever those monthly things are, and in those cases, some of those are kind of expensive softwares, so I'm going to put in this. And again, we have some of the operational or the options here. If you're not using them, then before you print, the last thing you're going to do is hide those, or highlight all those and hide them too. And that's pretty much it. If I scroll down, it does a bunch of calculations. This number here at the very bottom, row 88, is theoretically the amount of money that you have in your bank account at the end of the month. Now, the interesting part about this is you, and I don't have wages in here, you get to decide how much you want to pay yourself if your company can afford it. I think that I happen to be worth about $6,000 a month, and it could be that that's what I need to sustain myself. I've got a wife that I'm supporting and kids and a whole bunch of other things. So that's what I need to sustain myself. And at the very bottom, I can look and say, yes, there's money in it. I'm overdrawn here at the very, very beginning, quite significantly. Now, this is being covered by my overdraft protection, but because this goes up so high, I might like to look at some kind of financing to start. already right from square one, I'm 8,000 in the hole, and it gets worse for the first 4 months. So I'll cover those things in a different page. We have our financing sheet coming up. So the next thing for you to do is to say, this is year one. And now you have to do year 2, year 3, year 4, and year 5. Any questions with that? I'll see you in the next video.